This is Dan Max at EXPI Realty, aka the Trading Agent, and this is your daily market live chat. I don't know, just kind of calling it a free live chat. I know the market is rather, what some would say, confusing, difficult, and want to talk about, I don't know, a lot of the things that are going on. Just, how you're starting to see why the rules and the layering in and all of the little. Oh, sorry. This is Dan Max, EXPI Realty, aka the Trading Agent. Standing far away. I apologize, didn't have the mic in front of my face. I want to talk about what's going on in the market, just kind of give people a 50,000 foot flyby of everything from the perspective of why this is so damn difficult. And so why layering in, why layering out, why you got the rules, why everything is what it is, and just a trader's market. OpEx, ChopEx, whatever. I'm going to hit the 6-minute mark. Play, let some people wrap in. If you got any questions, feel free to jump in. This is just gonna be to kind of chat. Hopefully y'all can hear me. I don't know, I have a confirmation on audio yet, but I'll get it hopefully in a second. I had the mic a little too far away for a minute to start. Can y'all hear me? Anybody out there? Okay, cool. Yeah, I had it mic too far away for a minute there at the beginning. Let me mute the Discord room because it just usually is popping off non-stop. All right. Mute that tab. Awesome. Also, too, note to people who are here, the Discord room will be ending open invites soon. Kind of becoming exhausting trying to help people who just want endless help, in the sense that I don't think people do the work that I ask, and nor should they right off the start. But I just really don't want to have to deal with that anymore, because I take it upon myself to try to help people when I see they're struggling, but also realize you can't help everybody. So what I'm trying to do is trying to just lock it up, make it invite only, knowing that the people who want to be there are going to be working. The people who aren't, well, again, they can watch these recaps, or they can kind of hang out on social media. Like, the Discord room is going to be for the nuts and bolts of this stuff. If you want it live, but you're also willing to, I don't know, just be the sponge. Because I think when people, days like today are a classic example of the never-ending distractions in the beginner room, or people getting distracted by what's going on. And again, I really don't want to have a room full of like an echo chamber, but I want people to really like work hard. Like, what are out of the money options? Well, Google it. Don't ask the room, right? Like, spend 3 seconds to take upon yourself the work. Like, that to me shows little respect for our time, and also remind, like, be aware that people have to read your comments now. It becomes noise. People are like, oh, you're being anal, or your mods are being mean. And the mods are just like, man, these questions don't really help anybody. If anything, they just distract. So how you want to look at it, I mean, again, it can't make everybody happy. When you have critics, that means you're doing something right. That's how I look at it. Market is not easy. Let's just talk about what that is, right? So if you have any questions here, go ahead, shoot them. I appreciate you guys. I mean, again, if you took profits in the close, literally recorded the recap and was like, I am closing out trades as we speak. Hopefully you're taking profits. And I said, if we dip, look for dips to buy. And if we rip, you sell. Well, this morning you have an exorbitantly big bounce, or big drop. Good God. Good God. Sometimes you just can't expect certain things. You just didn't. I mean, again, this is why like the rules are in place. Like, the market loves to just slap you and I, all of us, around sometimes and be like, remember who is king of the markets? It's not us. Oh, you think you know what's going on? Wrong. The market will always be humbling, and that's just the reality of it. Take profits on SQQ this AM. I mean, it's, again, if I had SQQ from the highs, or have been trading around it, yeah, I mean, and you bought some, you should be trading it. You sell some, Scott. I mean, you should trade around a position. That's the thing about a bear market, trader's market, whatever. Trade around your positions. Like, if you couldn't expect, one layer, whatever. If you didn't expect this kind of big move, I mean, this is kind of a gift to all levels of traders in a sense, but only if you got cash and you're not all or nothing trading all the time. I mean, this is hard. And again, I mean, you throw in the layers of complexity with emotions and just, again, I don't know what 99% of well, actually I do. 99% of people are reading the news, trying to figure out what's going on from the headlines, or they're going to stock twits, or they're following some people on social media that are like, this is how it always is. And I'm just trying to explain to people this is not easy, and it's not always how it is, and this is a probability game. Anybody selling you certainty is full of you know what. Yeah, exactly, it did. The CPI market gave up the gain the very next day. No, we're going to talk about it here very shortly, what I think is going on, and hopefully this will be very logical, because if we're, again, who are we thinking from perspective? The market makers, what the operators are trying to do, and how are they going to screw over retail? If you put that first in your brain, you kind of see what's coming here. When? Now, that means, what, 11 a.m., 11:30, 12, I don't know. We don't know. Again, usually what I say, bad news is followed by what? Good news. Good news. We'll see. Sure, silver's holding up, I guess. I mean, I still wouldn't want to buy metals. I mean, I just can't. I mean, it's an overcrowded trade. Overcrowded. Overcrowded trades end with pain. We'll see. All right, let's let the alarm go. If, again, end it. Boom. All right. This is, everyone's here. We're good to go. Everyone can hear. Again, Dan Max, EXPI Realty, aka Trading Agent. This is a live chat. Most people who come in to the room, I advise that if they're watching this after the fact, to start here. This is where we're going to get into it. This is pretty much an open chat. And what I want to talk about first and foremost, what is going on? Well, what did we say yesterday? Here's the SPY. We're into the upside target zone. Literally said at the end of the video yesterday and said, hey guys, while we're here, I am closing out some trades. Literally. Closing out trades. Back to even. What I would consider neutral. Didn't care if went up, didn't care if we went down. Well, now we came down big. We all agree this is a pretty big gap. I don't remember the last time a gap this big since when? Here. OPEX. My thinking, and I repeat, this is what I thought. I thought we'd get this and then choppy top. Well, now we have a big gap down. Now, does it invalidate it all? Tough to know. But if you look at the put-call ratios, and you're thinking, all right, market makers really got to screw people over. Well, give them a high 5 and a perfect 10 for sticking the landing. Like, this is some, like, serious, I don't know, like 10 out of 10 action here. You know, I think of watching the Olympics and somebody's doing the balance beam and they just stuck the landing. They, reeled in bulls to go all in, bullish, at the highs. Everybody's get excited. But here was the thing. People still held a ton of, like, the puts were growing. Now, retail, you could see both sides of it. Remember we talked about the biggest numbskulls are usually yelling the loudest. Well, they were all screaming bearish, 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 bearish. Yet they've been screaming it since, 390. Now, you've literally given them the rope to hang themselves on. You gave the bulls the rope. Done. They've given up. And it's OPEX. It's time to get the bears. Coming for you. The bears. Now the bears are going high, getting hot, getting aggressive. Put call ratio got over to 2. VIX retested like the 26s. Ooh. Uh-oh. Now this is why I'm logically now buying. And I started layering in, and first couple buys were wrong. Didn't expect that deep. Then eventually thought, all right, here we are as a floor. Now I'm 2-to-1 long versus short, expecting a pop. Didn't add any shorts because why would I add shorts on a gap down trap during OPEX? right? That's what retail's doing. Like, look at social media. You got it, the end of the world, CPI, blah, 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 it's worse than expected. Well, yours truly and everyone else who kind of expected them to actually be better, because that's what literally everybody in the government was saying this week. Oh, it's going to be a better number. It's going to be a great number. Great, I guess. Maybe this is what the irony is. Like, maybe they... what if somehow they revise the number later? I don't know. That's probably not the case, but... Anyway, that's the basic gist of what's going on. You've now murdered the bears, and YouTube, if you're listening, I don't mean like literally anyone's getting hurt. Like, you've put the bear camp to rest, or sorry, the bull camp, and now the bears are going, we can't lose, game on, let's buy puts, all in puts at the open, and what do we think is going to happen? If Harry Hayote's listening, he said he thought the SPY would be a doji and close at 403. I honestly think that would probably be the most logical close here. Now, again, what time is it? I mean, we still got a couple hours. That, to me, makes the most sense. You want to put everybody in pain? Bulls are, ouch. Well, if you want to do the bears the most amount of pain, get it to close right where it gapped. Like, literally, close at the gap. 403. No, is that 401? Yeah, 401, 402, whatever. 400. Yeah, create a hammer. Thank you, Scott. That's the best way. How I would see it if I'm the market maker and I'm trying to sweep the leg from all traders. Because think about it. Like, this is why, and so here's, again, why these rules and why this stuff matters and why you layer in, you layer out, you use stops, you know the seasonality. Again, the more you're up, the less you own. Like, this is what happens. If you're newer to trading or you've experienced it, now if you took profits, you're like, it makes sense. It's a trader's market. You get this big action up. Don't be surprised it pulls back. I banned people from my room yesterday who were driving me nuts going, first of all, they never listen. You literally tell them, you should probably look at this, I wouldn't do that. Never listen. They were upping their price targets yesterday, and I about did a backflip out of my chair, got onto a plane, came to their house, and was going to just slap them around. Like, shake them around, like, no! What are you doing? You're letting the price action now dictate your plans, and that's what the market maker wants. Do you see how I was... Again, people are like, you're kind of a dick, and it's like, no! The plan was to hit the freaking supply zone. It's right here. We said get into the zone, the auto zone, whatever. Take profit, please. The more you're up, the less you own. This is way too strong, way too fast, in my opinion. Things didn't get better all of a sudden. But problem is, again, the put-call ratio is so high going into OPEX. Maybe at some point they pulled in the bulls and the bears. You just knew, is this a matter of both sides? Watch my video. It's on the back to basics. What is the goal of OPEX? It is to blow out everybody. Now that you know this, you can't forget it. Now that you know this, what? Be thoughtful. Got it? Be thoughtful. All right? I don't know what else to say at this point other than if you are struggling with this, that's normal. But if you're struggling with the execution of what the probabilities are, that's emotional. The stocks rise and you're starting to raise your targets to the 200-day. I don't usually get aggressive with people, but I'm like, what the heck are you doing? That would be like at the lows, at the zones, where it's due to bounce, you're going, well, the market's heading much, much, much lower. And it's like, well, look at the sentiment. Remember, before we can go lower, what do we need? We need the bulls to capitulate, meaning that they're just going to hold out. What would be the best way to do that? Retest these highs. Maybe this just comes right back to 410 by the end of the week. That would be the ideal scenario to get bulls just to go, whatever, I can't trade this. And the bears to go, what is going on? Then you get through OPEX and the position squaring's different. Everything's good to go. Then we can probably just go lower. But what's next week? The Feds. FOMC on Wednesday. Is the market going to absolutely blow out before the Feds? Highly doubt it. I highly doubt it. So now what becomes the game here? It's going to get choppy. It's going to get sloppy. The volatility is going to come in. The market's going to tighten up. Still think that happens. Any questions? Is this very clear now? And again, if you lost money today, I lost money on the long positions I had, clearly. No, there's no like sugarcoating it. This whole like, oh, I'm always right, I can't lose mentality is stupid. That's like saying nobody loses in like only one person always wins at poker, and there's only one golf champion, or what? I don't know what the best example is, but no, we still lose. But the goal isn't to turn one loss into a bigger loss by buying puts today, shorting. Like that's no red flag. No. Because you know it's OPEX. Any questions out there? Is this becoming more apparent? Very clear? People are like, I don't see why you'd be buying today. Well, if you don't know why I'm buying today, then you don't know OPEX. You're looking at the action going, freak out. We're down. Red candle, gotta sell. Green candle, gotta buy. I just don't know what to say. I mean, people have been doing this 20 years, still can't wrap their head around what? The game. They're still thinking it from their perspective, not the market makers, not the operators, not seasonality, not the OPEX, not any of these little things. It's all or nothing. It's never gray. It's always like, bring the ruler. Where is it going to, Dan, where's the best entrance? Dan. I said 400-ish this morning. I was like, well, what's 400-ish? SPY got the 397.60. You're the worst. Okay, fine. It went down a little lower. But what does that make you realize? Think about it. You stretch something out, rubber band's back quicker. Pow! Pounces back. It's OPEX. I'm telling you, you have to wrap your head around this. And if it just melts down and goes lower, then that was the 1% probability potential. I'm just telling you right now, that's the problem. Is you're playing through the mindset of what? Let's bet on the one-offs. Like, I about jumped out of my chair, and if Eno's listening, again, I'm going to do a backflip to start off out of my chair. And I was going to probably Zoom call him. And Zoom call, I'd reach to the screen, and I'd grab his neck nicely and say, what are you doing? He was buying weekly 160 calls on Apple. I'm like, you are not giving yourself any time. Yes, I like your bounce idea because I'm playing Apple, but what are you doing? Like, what are you doing? How are you buying out of the money theta burn weekly options? All options I bought for next week. Give me time. Remember, the IV will probably go up in front of the FOMC. All sorts of good things. Do you choose some entrances for a loss, or you mean just at the money? Do you close some entrances for a loss, or do you mean just down at the money? I don't know what that means, my friend. Yeah, I don't know. I'd try to rephrase that. Flip blaze, Philip. Would you be surprised if the SPY closes the year around this level and nothing but traders chop in Q4? No, I don't think that's possible. Again, because the fourth quarter, what usually happens during the fourth quarter? If the market's down, people start locking in their gains. They want their bonuses. Mutual fund, tax year, tax loss selling. There's a host of things that are coming up that if the market starts peeling, the onion peels, it's going to get worse. That's all I can really say at this point. But I think the realization is what? There's a lot of people playing this, it's a midterm year seasonality bullishness. That theory keeps getting pushed around real hard. I don't believe it because, again, I mean, you have to zoom out to the monthlies. If you're not looking at the monthlies here, I mean, please start on the monthly. What have we said? The straight line move. We're below the 20-month. It's the start of a bear market. We don't know what's coming. Why? I mean, can we venture a guess? China, politics, supply chains. I mean, you do the inflation, all sorts of stuff. But what did we say? When the QQQ broke the 20-month, well, also, too, what did we say? The straight line move is the preceding of the what? End of the move. Hammer, doji, pops. No. I mean, I still think we're going lower. Much lower. Just not now. Not until what? At least the Feds talk. Like, let the Feds, again, they've never managed a soft landing. But what does the market got to do to get big moves? It has to get people out of position. Does this make sense? Like, you need to get everybody anticipating the wrong action to get the best moves. Like, that is always going to be the best way to get the market to do the wrong thing. Think about it. All in at the highs. Everyone's bullish at the highs, right? And then it goes at the lows. Everyone gives up and it goes higher. Well, what is probably the best news right now for the market? Go back to the daily. Go back to the daily. It's what? It's this chopping game before you pull it further down. It's this chopping game during OPEX. It seems logical to me. How pretty is my chart? Again, at a certain point, I mean, I said watch this area here in the 297s. Talked about that in the Discord room. We'll see. We'll absolutely see. I don't know anything for certain, but I do know that this gap down is a game. It is a obvious game today. People are like, it's a professional gap. Technically, if it's the start of the move, yes. But could it be a bunch of gaps and traps? That's where, like, I think trading can get so incredibly difficult, because you're sitting here going, well, if a professional gap, this was the start of the move. This is now getting to just like sloppy, choppy action, right? Gap down, goes up, goes lower, gaps up, double gap, chopping around. I personally think this, and this is from my experience, you gotta play some games before you go down. It just seems logical. And the best way to do that is to what? You gotta get the put call ratio down. You gotta get the hedges taken off of the market. There's a lot of ES hedges with shorts. There's a ton of, obviously, people who own puts. That's not the best way for the market to make money, right? We all not agree? Is it clear as day that, like, if the market makers are trying to take the most amount of money from the most amount of people, then they don't want everyone hedged, and they also don't want everyone with owning puts? We agree. Yes, 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 yes. So if we know that, and we assume, and these aren't assumptions from what I want. This is not what I want. What I want is a dropping absolute bomb smash. VIX 60 to 100, get it over with. But to get to that point, I think you have to instill hope. It's like the Dennis system. The Dennis is the market maker, if you know that reference. You have to instill hope. You have to somehow instill hope before separating entirely. So there's really not much to say. I mean, if you have questions about the intraday levels, I mean, people always like, where's the best spot to enter? Is it always going to be perfect? No. TLT, good call. We talked about this. Talked about it at the open. Like, whoa, somebody's rolling. I mean, again, CPI is getting worse, but look what bonds are doing from the open. Talked about you could probably buy in the 106s. Ideally, 107s would hold, but Dan, it went to 106.24. You idiot. You don't know what you're talking about. All right, man. All right. Well, is this a novice gap? Some big gaps here, y'all. Do we need, and remember what we talked about? What are the three scenarios of a bottom? A lower low, an equal low, or a higher low? You don't just go, well, it made the new lows, it has to go lower. Look at today's action. It's telling you something. CPI comes in hotter, bonds get sold, are rallying. If the bonds are rallying, think about it. Is this a trap here? Remember, we own bonds. We've been recommending it. Oh, but Dan, you're catching a falling. It's like, is it really a catching a falling knife? It's a reference zone, right? Choppy, sloppy. I mean, same up here. Like, you got, it's all just repeating patterns. I don't know how to get people to study this stuff. They just don't seem to, like, they want to know the exact price, which, again, if anybody can tell you with an exact price, that's luck. I can count on the number of feet, toes, toes and fingers, how many times I've nailed something to, like, the exact penny. Intel is now on the 29s. God, man, well, I talked about Intel for weeks. I'm like, everybody loves Intel. I'm like, that's not how you bottom. Everybody loves what? I mean, maybe Intel is retesting the lows. I don't know. Will traders start to worry that the Fed will extra hawkish next week and stay away or short? I don't care what the traders are doing. I want what the market makers doing is trying to get people to do the wrong thing, Thomas. I think you keep talking about silver like it's bottoming because you think somehow the traders out there are actually controlling the market. Oh, but this is this in silver, yada yada. Well, this in the market. Thomas, my friend. Good question, but the problem is your perspective is wrong. What does the market maker wants to do? What do they want to do? At the lows, they want people to buy and shake them out and blow them out. At the highs, they want people to continue going long to shake them out before they drop it. I mean, it's not an exact science. It's just a repeating pattern. You don't know when, how, what price. But the stuff that is over-owned, that's not how you bottom. All of us don't come here and go, hey, silver's bottoming at 18 and it's that easy. Right? Hey, gold's bottoming at this price. It's easy. The hardest trades are usually the right trades. And the hardest trade is what? It's usually to blow out the bottoms. You want silver to go rocket higher, just like Apple did, that 10 straight points. You had to take out the range lows to go higher. Because the bears think they can't lose and the bulls give up. You want the positioning always wrong. In the market, the traders. That's who you want. Yes, the hard trade is buying today. I always talk about like the hardest thing, selling yesterday, is usually the right thing. Soxo, good entry? I mean, yeah. 207s on the SMH? Absolutely. With a stop, I mean, probably. You probably get at least a point out of it. Does this make sense, though? I don't care what traders worry about. Because the market maker is going to do what? If it knows the traders are worried, well, guess what? It'll run the price up to get them to chase. And if the traders are confident, they'll knock the price down to get them uncomfortable. That's the logic of it. Again, what StockTwits is doing is usually wrong. What social media is doing is usually wrong. Right? Now, again, will they be right sometimes? Well, think of it as you have to fatten up the pig to slaughter. The market makers know that. We'll give them an inch to believe that they can't lose. Then they take the mile back. That's what always happens. Been trading gold, silver forever. One of the things you always know for a absolute mofo fact, you do not buy gold and silver when everybody's bullish at the lows. That bottom is never the bottom. Never. Zero. Never, ever. I don't care if they're draining COMEX. I don't care if they're draining
every freaking index that holds gold and silver, that's not how you bottom. That's not. I've seen this many a times. Now you're close, but that's not the actual bottom. The VIX blowout, the spike, the actual capitulation when the VIX goes to incredible levels. All margin calls are equal. Everybody will be margined. People will sell winners and losers. That's when you want to buy this stuff. And maybe it holds up great. But this conversation about gold and silver is so stupid because people don't know their homework. They haven't done their homework. It tells me a lot when people go, well, did you see this and this and this? It's a manipulated market. Holy crap. Are we going to deny it? But then somehow we're going to expect something different. That is insane to me. Because I love gold and silver long term. I'll buy physical at these prices all day. But to say that I should be buying paper, gold, silver, and miners, my head explodes. Makes me want to do a backflip out of the seat. And just go, what are these people doing? Unreal. Yeah, but that's the thing. They're all sitting around singing Kumbaya, thinking that's how you bottom. No, the market makers are going to make you scared, senseless, before the bottom is in. They're going to make you question gravity. They're going to make you question your commitment to a trade. Just like at the highs. Nobody's bearish. Only going higher. Let's move our price targets up to 440. It's a bull market. Do y'all remember that a couple weeks ago? It could only go higher. Then it... Seeing two red candles of above average volume bookend the last few day moves. Would you be a pattern of a trap? Hey, Karthik, what chart are you taking about, my friend? What chart are you referring to? People say, oh, why you get burned out so easily? It's like, man, because I'm talking to people who just deny reality. SPY daily, okay. Seeing two red candles above average volume bookend the last few days moves would be the left out of a trap. It's OPEX, man. I think you got to just know that OPEX is trying to kill both sides. What I mean, and again, Google, I don't mean like literally anyone getting hurt. I'm talking about the market makers taking traders out back and hurting the bulls, hurting the bears. Like, that's the market. It's taking the most amount of money from the most amount of people. If I am thinking of the psychology here, and again, Harry said it perfectly. Yodi, if you're here, drop your link. Twitter, people follow you. You're a good follow. Look, bring it back. Bring it right back to where we opened. Then everybody who shorted was wrong. Everybody who held through this wrong. Smash, 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 smash. That's how you have to think about it from OPEX perspective. Go look at the put-call ratio. What is the put-call ratio on SPY? It's still 1.87. It's almost 2 puts for every call. That is what? An over-bearish reading near term. I mean, it was up to 2 at one point this morning. I think it got up to like 202 or 205. I can't remember. 2.05. Any other questions? I agree. Karthik, you gotta think of ChopX differently. You just mentally have to be prepared. Some people say I never trade OPEX. Like, they don't. There's a reason why some people will just literally won't trade it. Because they're like, I don't even want to get caught in it. Because all your hopes and dreams of upside breakouts, downside breakdowns, not likely. That happens so many times. People's hopes and dreams of continuation moves become absolute nightmares of nothingness. But Dan, this and that, and that, and this, and this, and that. Nah. Nope. SMH. I mean, again, let me just draw. I mean, I'll take it directly from the volume at price zone. We're into it. We earned it. Yo, what's up, Sonny? I have a quick chat about layering in. In the Livermore books, he talks about never averaging down. Do you average down into layers or wait for the confirmation and add? That's a good question. Again, I think the difference between like Livermore and what I do. I mean, what do you like? What is a confirmation of a loser? This becomes the biggest question, because if you're looking at a zone and you're in the zone, do you know if you've technically lost or not? That becomes really the hardest part. Because if I'm layering into a trade in a zone and it technically I know that I'm always early, I'm rarely going to be perfect. That to me is where, if the zone matters, I'd rather layer in. And technically, am I adding to a loser? Yeah. But if the evidence is still in this area that I like it, I have to be thoughtful. Okay, well, I'm not going all in. I'm not going level 5 aggression, right? I'm taking a taster's test. You know, I'm taking a small spoonful and I'm like, taste right. Let's see what happens. All right, if it goes a little lower, but it's still within the realm of possibilities and probabilities of holding this area, all right, well, maybe I'll add a little more. Again, I don't get crazy with layering in at lows. Remember, I'm talking about, I'm like a very, like, what's the word? Like, very cautious. Remember, time is my friend. So I'm like letting the evidence try to build. Right? I hope that makes sense. And if I only get one touch, then I get one touch. That's what's so hard, is that people try to go way too aggressively right off the start. And you realize that doesn't really pay out that well. Sometimes you get lucky, but 9 times out of, you know, it's like a Sex Panther cologne, you know, works 40% all the time. That's what it is. It works 40% all the time. Whatever. So if you have in your mind certain perspectives of how you want to trade, think about it. We're up big. Anyone who's following, minting money, right? If you took profits yesterday, you are trading like a pro. Love it. All right, well, the drop down, initial. All right, take a little toot. All right, next little drop, take a little taste. Okay. We're still in this area. I still like it. Now I see like the Qs and the SPYs starting to bottom. Now I'm like, I'm gonna take a bite. Then it's holding. I'm like, all right, I'm now long more than I am short by a significant amount. And what? My stops are my stops. I think the hardest part, again, is just time. It's obviously going to be time. Yeah, thanks, Kerwin. I mean, that's what I'm like. I don't think people realize, like, if you actually follow the stuff that we're talking about, I'm not saying you're going to win every trade, but you're going to not lose as much, and you're going to do hella damn good with the market. Everyone wants, like, tell me exactly what to do. No. What fits your personality? And what is your knowledge base? And how does that allow you to do what? Trade it. Serum. Yeah, bounce right back to the support zone. Look at that. Nice buy there. Bouncing back. Gap down. Things that aren't bearish. Right? Things that aren't bearish. Apple bounces up, bounces right back to what? I've been buying down here. What do we know? Apple typically rallies back last. Maybe Apple again. I mean, read the headlines. They're oversold, overbooked for iPhones. Now, again, I don't know if that's typically bullish, because if they can't keep delaying it, but whatever. Point being is, somehow they're going to upgrade it and somehow say that there's demand. That's what they do. Right? Yeah, here we go. The TLT. You're welcome. You're welcome. Oh, Dan, you started buying in the 107s, 108s. Well, again, layer in, and I'm also playing for the bigger move. This is a double bottom, maybe 120s, worst case scenario. Not too shabby. And if it gets real crazy like it did in 2008 and the VIX spikes, the TLT went from 89 up to 125. 35 points. Would you take 35 points in the TLT? If you bought December calls, or you bought your leveraged ETF, or you bought stock? Yes, you would. Yes, 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 yes. Now look at that market rallying right back because it's loving the bonds. Look at that. TLT back to positive as we speak. Candles growing as we speak. I'm telling y'all, do not mess with the game. December 120 calls? No! 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 Why do people buy lottery tickets and expect to get rich? No. God, no. You're probably doing that to troll me because you saw me murder Eno in the Discord room. And again, no one got hurt, just feelings. In's the money, Lebowski. In the money, please. In the money. Trade it like a stock. Buy less, but get more guaranteed wins. My feeling wasn't hurt. I've got very thick skin. Good. Then you'll figure this out in like 3 seconds. Love it. You will figure this out very quickly. Try to think of options. All right, here's... All right, here we go. I'm going to pull up my option sheet, and I'm going to explain to you options. You know, since you're here and you said you're not butthurt, good. Let's talk about it. Let us absolutely talk about it, because I appreciate your honesty with yourself. Oh, you can't read it that well. How do I blow that up? Can y'all read this? It's probably hard. Can y'all read this? I'll talk about options. Let's just do it. I'll run through it. This is, since you're here, you are actually the guest of honor. Because I don't want to have this conversation with you or anyone else. Again, click open original. Okay. Click on it and nothing happens. Oh, there we go. Kind of bigger. Whoa, it opened 7 times. Can I zoom in? Give me 2 seconds. All right, give me 2 seconds. I got it somewhere on my trading sheets. I'm going to open this. This is for you, my friend, because I actually respect that you stuck around and you didn't take it as I was like being mean. It's more of like, I try to explain to you, like, please, where are the option notes? Give me 2 seconds here. I apologize again for the delay. Too many freaking screens open, too many things open. Let me see if I can get this. I apologize. I don't have this. Why did I not save this on my other files? Give me a second. Whatever, if you gotta go, you gotta go. I understand. Just trading. I got so many documents that I created for folks, and I don't know where I stored these. Brutal. All right, Lupus, if you're around, hit me up. Anyway, it doesn't matter. I'm just gonna read it from the sheet directly, and you can follow at home if you're in the Discord room, or you can follow on your own. I don't know why I don't have that bugger saved. I'll just read it out to you as well. All right, here we go. Press Control Plus. All right, I can try that. Control Plus. Yeah, yes. Nice. Coming through. Okay. Here are the trading rules for my options game. Expect total losses. Got it? Rule number 1, to scare people. Expect total losses. When you play options, know what you could lose. If you get screwed by a gap down, like today, a gap up overnight, holding through the weekend, or if you're just flat out 100% wrong, your account is $30,000. Don't buy $30,000 worth of options. Lesson clear as day, right? Expect total losses. Know that when you are buying options, imagine if you bought calls today, gone. Imagine you bought weekly calls potentially out of the money, gone, zero, kapow, gone, zero. 2, know your risk reward. Do not buy puts or calls in something that has already made a big move. There's a high chance will likely kill the options by chopping or reversing before the next move. Market runs up, people buy calls, kapow, gone. 3, research the details of your options at lows and highs. If the IV implied volatility in the option is high and the VIX volatility indicator is high, your options are likely to value quickly if either one of those two decreases. Meaning, if the VIX is elevated, say the VIX is 70. And remember, think about the Black Scholes model, how actual options are priced, like the actual calculation. If the VIX part of the formula is high and the VIX comes in, now the pricing of your options comes in too. That's why more people sell options than buy them. Right? Got it? Like, that's why the market maker loves to sell you and I options. Know your time frame. Don't buy weekly puts for a trade that might not happen for weeks. If you're swing trading, give yourself at least 6 weeks or more for the move to play out. One of the biggest mistakes that people make is to not give themselves enough time or not allow for the full move to play out due to feeling the time crunch. You can always manage the size of the trade as the move unfolds. Well, again, what does that really mean? Time. If I anticipate something to happen on the hourly chart for a week, maybe I'll buy weeklies. Maybe I'm expecting literally to happen now. Has to happen right now. Right now. All right, well, if it's something that's going to happen this week, then I probably should at least buy something in the next week. Right? Just to give myself time. Maybe it doesn't happen till Friday. Always got fishing on my mind, bro. Always. Does this make sense? If you are anticipating something to happen, if the market is going to take a dumper during October, do you see why we're buying November and December puts? I don't want to I don't want to have to buy the October OPEX and then the market tanks. And I'm like, well, now my options have no time. And maybe I'm flat up on them. Who knows? You never know. But crap. Crapola. Wrong. If you're picking bottoms and tops, you want to sell options on the first bottom of the top or touch of resistance support. The additional retests are where you could buy calls or puts. You can even use this in an intraday trading. It is the first test. You should buy or short stock only. And then on the retest, buy calls or puts. If it's the first hour of trading, the spreads often are wide and options might not be worth the trouble. Does this make sense? The first bottom. Remember, we talk about retests. Retest. The first bottom probably is not the best time to buy options. First top is not the best time to buy puts. Do we get this? Clear as doo-doo. Day. Rule 7. The probability is this is probably the most important rule. If you trade X amount of stock, then you probably should only trade 10% of X as options. Well, if you have a $100,000 account, probably have a $10,000 trading account, option trading. Whoa, but Dan, I can make more money with options. Yeah, and you can lose a ton of money with options. Again, this sheet, this is worth thousands of dollars if you understand it. It makes sense. I never thought I'd read this live, but you know what? I'm getting so annoyed with people just doing everything wrong in options, and it's like, all right, it's time. Rule 8. Never ever chase action with options. I know you might have gotten lucky before, but overall it won't work in the normal times. The market chops just as much as it rises and falls. The only exception is during the breakout or breakdown from a verified major level of support. For example, when something bases for a long time, weeks or months, then it breaks, then you can probably buy calls, puts. Think about it. What's an example of such? Think in your mind. What is something that went sideways, had a support resistance, a level, a very obvious area? It based out for a long period of time, then it broke out, then you could probably do it. I'm not big into spreads because I don't want to limit my upsides. That's a good question. I just don't really sell. Again, I'll sell puts to buy calls or sell calls to buy puts, but I don't sell spreads, diagonals, condors, straddles, all that crap. I researched and I'm like, why would I limit my upside to 5 points? I don't like 5 points in general, in the sense if my risk versus reward is always in my mind. I want to maximize reward
with minimizing risk. People love to do that stuff. I understand, and that works for them. That's fine. But you're not getting rich on 4 points. You're just not. If you were going to trade options for the purpose of actually making big gains and limiting your risk, then you have to have in your mind, all right, well, I can be wrong. I can have a stop here, but I absolutely don't. I don't make big money in my options accounts doing spreads. It's riding the apple for 10 points, buying a ton of calls, selling them and being fine with it. But limiting my upside and trying to like really tackle this like squared move, then I shouldn't even be trading options. If I don't think something's going to go anywhere, don't trade it. Use your capital elsewhere. Like, that's kind of how I think of it. And again, people can argue differently. I get it. There are some very good traders who just do spreads and they do. But the problem is when people do spreads, I've been there, and the one-off moment happens, now they have to manage the spread. Say a big move happens. And this is why we're taking profits versus just sitting here with our options floating in the ether. Because what typically happens, these people with spreads, they sell the put and they buy some puts lower. Or they sell some and then all of a sudden the market gets out of whack and they go, well, it's just okay just to sit here and hold this. And now they are managing a position of like 17 different strikes and 17 different puts and calls and going, I got to double this and triple this and do that. It's like, you just got yourself like in a pickle. Now again, you can manage it if that's the preferred way. I can't tell people that that's not right because it is. Like, there's certain great people who straddle. I mean, again, diagonals, verticals, I mean, all those things. They make sense to me, but I honestly do not sleep well at night knowing that I have to like overmanage an option trade. And if it goes against me and now I got to like do more options, now I'm not like really taking advantage of the market. I'd rather just close out my crap for a win, loss, whatever, and move on. But that's me. That's my personality. Yeah, the assignment risk, they limit your account balances and abilities to trade in places. Y'all know what I mean. Rule 9, back to, assuming you're going to lose. If you don't do this, you'll hold way for longer than you should. This is exactly what the problem with like spreads and some of these option trades where you just hold them. I hate it. This type of leverage should be utilized to get the quickest move for the time frame that you're trading. Counter moves happen, so be prepared for them and only use options to get the quick and easy money. Once the move has started, instead of trying to squeeze every potential penny out of the move. This is, again, why you layer in, you layer out. You trade around a core position in options. You give yourself time. Know the IV for a stock. If the IV is jacked up, it means the options are going to be expensive. Trading it will be wide and loose, trading will be wide and loose, which can easily take your stops out. And if the IV drops suddenly, your premium drops with it. We've seen this. You had a stock that has low float, 50 million shares or less. It has option spreads that are 20% wide. The IV spikes and the options go up 40% spread, but then they come right back down, and now your bid ask is like down another 10 or 15%. If you don't know what I'm talking about, just be careful with low volume stocks. 50 million shares or less, very difficult, not a ton of liquidity. That's why I tell people trade Apple, trade SMH, Microsoft, AMD, whatever is a Tesla. At least, I don't know, sometimes Tesla can be a little sneaky. You just trade. You don't want options that have spreads that are a mile wide. That's how I'd be careful of. Rule 11, ask for help. Unless you've traded options for years, you don't realize how the spread, pricing, seasonality, decay, market, and so on are going to be affected by options. If this is the case, best thing you can do is simply not trade them. Simply not trade them. Well, that's, whoa, why would I do that? Right? That's what people say. That's what they say. Well, I've told people, it's like learning, it's like you're handling grenades. You better know what you're doing. Wow, these rules are pretty in-depth. Look at that. TLT. Backup. Apple holding 156. SMH holding 207. Mr. Softy holding 255. Yeah, everything's rallying back. Like we thought. SPY's it back. Yeah, here comes 400. Yeah, Jordan, your dilemmas with options are what like
I couldn't sleep at night. I'm like, all right, I gotta make this simpler. I just gotta make options simple. I'll just buy less. I'll just do small. I see people who honestly in the Discord room trade bigger option sizes than me, and I'm like, good luck, man. Hope it works. I mean, I'm happy with 5 and 10 options, 15, 20, 30, depending on the pricing. Limiting my risk and being like, all right, if it moves up 10 points, I got 10 options. Great, that's 10, probably not 10 grand, but with the delta, hopefully it's 7 to 8 grand. I'm happy. I'm very happy. 11. I've been in trades where the underlying stock went up 10%, but the IV and the VIX volatility indicator were so jacked the options actually went down as the IV and the VIX unwound. This is why call buyers at major lows usually get crushed. This really talks about what will happen when you see the market spike down and the VIX is in the 60s or 70s or 100 or whatever it gets to, and then it all of a sudden just like comes right down. Like, that's crazy. Like, I mean, I still remember options and NOV. I can't remember what strike price it was, but I bought some calls and the stock popped 10 points and the options were at the money, and literally it popped, but in a weird kind of fashion as the IV came down, and it was like the options just were like stuck in the mud. It drove me nuts. And I still never forget that, because it was like, man, you bought some options right at the money with the VIX spiking, and then it unwound, and it literally just, it's like, hey, somebody reset the bid ass. Something's wrong here. It was like, just came right in. 12. Wait. Buying options at the open or before the move happens might seem logical, but is actually a major gamble. We all gamble, but at least know that you can lose it with the options. With stock, you might as well just have to endure some heat for a little while. Again, with options, wait, meaning if you're gonna like dial into it slowly, please, like, don't be all or nothing. Like, that's why I was hammering Inu. Like, he's buying 30 out of the money weekly options. I'm like, don't do that. Absolutely don't do that. No. The only options I bought for Apple were the 155s next week. Giving myself time in the money. Even if now they're less in the money when I bought them. And down I don't know what it is down. I got down a point and change on them. Not great. Not great at all. But at least, again, like, if Apple comes back, market comes back, like, these are going to come right back quick. Those out of the money ones are probably going dink, gone. Like, just shriveling up like a raisin. Beware of sentiment. If everyone is pumping the same idea that you're about to get into, then you're probably right on the edge of the counter rally for the stock. For example, Tesla calls bought in November 2020. As the stock kept going up, popular opinion was that it could never go down. Higher and higher prices, targets were constantly being upgraded. This was great. You already had calls from earlier in the months, but you had chased them in November, you probably got screwed. Once retail is all over a trade, you need to look around and ask, who are the suckers buying now? I always think that. Just like yesterday, everyone, people were like, oh, let's pump up the price targets. Let's buy more calls. I'm like, I don't know. Then you look around this morning, everyone's like going puts, end of the world. Okay. Options pin action. The larger order sweeps aren't the holy grail. You don't know what the market maker is doing and who's on the other side of the bet. For example, a whale might purchase a giant number of shares in a particular stock, betting that it will move upward. Later on, as the stock nears resistance, the same whale might enter a big put position as a hedge against the huge amount of shares. When the puts are purchased, all you see is the sweep of puts being bought and assume that someone is betting big against the stock. But in reality, they might have a much larger bet to the upside. Back in the day, I used to believe that the sweep action, the bid, like the option action was like always, oh, well, someone's buying puts, it has to go lower. Oh, someone's selling or buying calls, has to go higher. No. Got to think about it. Remember when the call, anybody here remember when I was laughing at Occidental Petroleum when the put call ratio was 0.2? 0.2. Everyone was buying calls. Who was selling them? Mr. Buffett on line 1, Dan. Can you take the call? Yes, I can. Telling you. Buffett. Okay? Do you guys get this? Like, you're only looking at the option trades from the perspective of you think it's like retail. It literally might be a hedge. Well, what if it's a hedge? Well, then maybe they want them to buy puts and move the stock up. later. I mean, you have to think of it from all these different perspectives. And one of them is just not, oh, because I see volume on this option means that it doesn't necessarily has to go lower. Oh, let's sweep it to this price always. Not always true. I've seen that wrong a ton. You will too if you actually like put your nose into it. Always know what's coming. Important news release on a specific upcoming date, the FOMC meeting, and the first of the month, option expirations, earning release, product approvals. If you're buying options completely unaware of the upcoming catalysts and the potential market dynamics, you could potentially get wiped out. For example, buying puts on a huge gap down right before the FOMC. Oh my God! Rule 15. Hercules, look at that. Buying puts after a huge down move right before the FOMC. I didn't update this, but that was there. Rule 16. If the stock has low liquidity and wide option spreads, you better be sure, know that the move is underway, happening right now. If the move isn't moving right now, you could take 20% loss in no time. Even if it does move, so you still have to be able to sell it at the price, but you want to due to the low liquidity and wide spread. Again, same thing. Be aware of stocks that have lower liquidity in their options. Rule 17. So this is where we talk about like managing a swing trade with options. Is there anybody here, or am I still talking just to myself? Because it feels like it sometimes. Like with stock, the more something moves in your favor, the less you should own. With options, though, you should take more off when it moves. If the move is bigger and you want to pair risk, then this is what you do. Cool. If you're buying the USO 95 puts, wow, remember this trade? I actually put it on paper. Talked about shorting USO. What is the USO at right now? 70. All right, if you're buying the USO 95 puts, for example, as we're targeting 60, and the stock drops to 80, you take off half of the 95 puts. If the USO bounces, when you should buy the 90 puts, and when it drops to 70, you'll take all off of the 90 puts you bought and wait for another bounce. Things don't typically move in straight lines, and if they do, be very cautious. On the next bounce, you would buy the 80 puts, and since we're closer to the end of the move, we will utilize at the money put options to limit our risk. Then you set a hard stop on your 95 puts, then remaining half of the beginning and play house money in the latest 80 puts. All right, let me bottom line this. That's hard to read. Ton of stuff. You buy what? In the money, deep in the money at the start of a swing trade, right? It moves in your favor. You take off half of those 3/4, whatever amount you're happy with puts. You expect it to bounce. Now you buy at the money with lower premium puts, say 90s, 85s. And now on the next drop, what do? You take off all your 95s, you keep your 90s, and then when it bounces, now you'll do another strike that's lower. And then on the next move, you take the 90s off, and then you would buy more of the 85s. On the next, you see how like the whole step sequence down, you can't keep buying the super high priced options, right? Because then if it goes against you out of nowhere, because say Ukraine, who knows what the catalyst is, if you had short oil with the USO puts, you want to continue to like manage your risk premium so that if you're buying at the money puts to start, say the premium's $10, for example, then when you restart a trade, you want to try to find the options that are about the same price. Because along the way, you probably turn 10 into 20, turn 10 into 17, turn 10 into 25. Now you're restarting the trade partially, but also limiting your risk in the amount of put premium you're buying. Does this make sense? Read this example again, because this is what we're talking about with oil. Because a lot of people, again, I even butchered this trade because I started looking at other things. Like we talked about oil going lower. Because again, everybody was bullish oil. I mean, this stuff is so obvious sometimes. Remember I talked about like, why would you short uranium? Everybody's long uranium. Why would you, and again, you don't need short, I wouldn't short uranium in a sense, but like, why do you think it's going? Because everybody's over-owned it. Same thing with what? What? Oh, gold, silver at the lows. No, that's not on the freaking bottom. I apologize, it's kind of fast, but think about it from the process of like, say you have a $10,000 account and you're going to buy $10 options, right? So say that strike at the example for the USO at that point for the 95s when it was in the 90s was what? $10. It drops down to the 80s. You now have that premium that went from 10 to 20, 25. You take off a decent amount of it, knowing it's going to rally. But on the next rally, you look for the support resistance zones. And then you go, all right, well, I don't want to buy any more options that are more than, like, say, $10. You know how you say you play with the house money, you let it ride? No. We're affixing a cost to the trade, knowing that if the trend is going in our favor, well, then we're going to make like 5 to 10x the actual $10,000. We're going to turn that into $100,000. Like, that would be the goal. Not to ride the 95s all the way down with unlimited risk. Because what happens if something changed? Well, at least you've been booking $10 segments partially or fully along the way. Hope that makes sense. Oh, $3.99 on the SPY. We're cooking and rising. Does this help? It's really hard to think about it, but run some simulations in your mind of what would happen. Here, let me give you an example. Let's just pull up a chart and let's run an example. TLT. Here is my game plan for this, right? Like, man, this is going to be fun. I'm buying the 105 Decembers, right? When it rallies up to 119, 120, we are going to what? We are going to catch a pretty solid move. Agreed? Agreed. I mean, even if you want to say 112, 115, whatever number is your near-term target. Okay? I'm going to take off a significant amount of those calls. Make sense? Clearly. Well, then what would be the next support resistance zone? Well, it's probably going to be around what? Volume at price. Here you go. It's sticking out like a sore thumb. This guy. Somewhere around here. All right, well, then if it means it comes back to 115, and when we bought the 105 calls and the stock was around 107, and if we're at 115, I'll probably buy like the 112s. Same kind of risk, but now that I put in a big fat whale of a blubber meat into my pocket, now I can trade it again. But ultimately what you're trying to do is put, you know how people say, oh, you buy 10 options, sell 5, let the rest ride. No. That is stupid thinking because you're assuming the move is going to go in a straight line the whole time. When the reality is now you're anticipating the pullback and you're going, yeah, come to daddy. Come to me. Come to me. And if it goes higher, straight line, which is the low probability, well, guess what? You have less amount of options at that point. But if you were trading it and knowing like, all right, I expect the TLT. I mean, look at even the down move. You go down, you pop. You go down, you pop. You go down, you pop. You go down. Do we see that's the case? Well, we're going to go up and we can pull back. We're going to go up and we're going to pull back. We're going to go up and pull. You want to do what the market is doing. And the best way that I find to do that is to start the trade right here with these calls, right? Whatever your full position is. Say it's only 10. Fine. That's great. 10 calls and this moves 10 points. You're not going to be pissed off. And what happens? It bounces. I mean, say 114, 115, right? And it's at 107. That's a pretty solid move. Well, with the moonshot scenario, you should have clear, ample risk involved. Like, that shouldn't be a question. Like, you're going to have some of those options. Like, the moonshot, no, that's a good question. We all want to believe it's always going to be a moonshot, right? Like, that's going to be the assumption. But if the moonshot does happen, I'm still going to be, like, managing my risk within it, right? Like, the more I'm up, the less I'm going to own. Maybe I pare it down quickly and we just even chop for 2 days. Like, let's go back to 2008 on the daily. Let's see if I can do that. That's a good question. Time machine. What did it look like? Remember how we talk about basing and then breakouts? Look at that. Man. That's the only time you should really buy calls. Like, if you have like a ceiling and it breaks over it, boom. But then look, would pull back to the breakout. Perfection. Perfect market maker. Yeah, I mean, you probably would take some profits. Look at this. And then it pulls back. And then it pops some more and it starts pulling back. Yeah, I don't know. I'm always more concerned about harvesting gains than, believing in the moonshot. And maybe that's my problem. And people are like, oh, you deserve to win. You should hold out. I just don't think the moonshots are always worth anticipating. Now, it doesn't mean you can't hold some of those calls, right? Like, that's great. But I like to see this kind of action. Like, this is where I think people don't realize is like when gold becomes gold. Like, when I mean like gold becomes gold. Here, hold on. Let's go back in the time machine. Oh, way too far. This is what gold's going to do. It's going to go up, and then it's going to chop. And then it's going to go up, and then it's going to pull back. And then it's going to go up, and it's going to pull back. You're playing this game of do-do-do-do, and then the more it goes up, then you get a bigger pullback. And then it chops, and then it double bottoms like it always does. And then it starts the rebuilding process. And then it starts the rebuilding process. All right? And then, whoop, there it goes. Starts it over. Here you go. Big chop zone. Breaks out. Ding, 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 ding. Chops. Pulls back. Do you see how along the way, no matter what you think, I think, the market thinks, you have to think about the whole game as a position squaring, like, mindset of, like, what's the market maker's going to do? Like, you're still going to get big pullbacks. And then you're going to get, what, chop. And then you might backfill a ton. I mean, this is where it gets really hard, right? Like, here's 2008. Remember we talked about, please don't buy gold until the Feds capitulate. Kapow! In October 2000, bam! It looked like it was making new highs. It looked like it was sucking, bam! Came right back. Yeah, there is going to be a moonshot in the TLT. I just don't know. Again, I want to harvest it, but I also have to think about this through Justin, because one of the things that might happen within the TLT moonshotting is opportunity elsewhere. That becomes the hardest thing, is like, all right, do you think, is it worth owning TLT for another couple points, or is gold ready? Is silver ready? Is certain things in the market ready? That's the question you don't know until it shows up. So this is a good conversation, because again, we're going to get there. Trust me, we're going to get there where there's going to be a TLT spike, market drop, metals puking. I mean, just instant replay of the past. IV spiking. What are you going to do? Well, personally, I would like to start off by selling puts to buy calls. Longer dated calls on stuff. Just in case I get the IV bleed, I at least get paid knowing that I'm close to the lows, right? That's going to be the first, like, layer of this trade, right? Man, this is all. I love gold. Gold is so effing easy. Look at this, man. Look at this big ass chop zone here. Zero doubt in my mind we blow this out. How far? I mean, it doesn't even matter. Even if it's $1, it'll knock all the stops from the last 2 years. They'll all be wrong. All these folks. Let me back the truck up. All gonna be wrong. That's where you have to think about the probability mindset of just, all right, well, yep, the moonshot, you got some. If the TLT spikes, are there also going to be some other opportunities? Justin, you not agree? Do we not agree that if the market blows out, is it just going to be you want to hold the TLT for another 5 points, or is there going to be something else there that might be there? That is always the question you have to ask yourself. Yes, James, sorry, I didn't read it. Yeah, you guys buying Octobers? Ugh, no. You should be buying minimum Decembers. Just let it play out. Like put it in there, buy 5, 10 calls, just leave it alone. Leave it alone. Don't trade it. Like, this is the TLT. This is not freaking Tesla or whatever. No. This is hard stuff, man. Like I said, I mean, people always want to know the answer, but the answers sometimes don't present themselves until the market happens. Do you see how we're able to, and again, this is only you get from experience, is to like look at the market through the past, seeing what's happened, be able to anticipate, and then act accordingly. Like, if the TLT has upside 30 points, and I can take 10, 20, 15 points out of it, great. And then I can let some ride, cool. I know in the back of my mind that there's going to be other trading opportunities than TLT. I hope that's clear, right? Like, that's not going to be the one that I want to moonshot. It's going to be probably gold. It's probably going to be some materials names that are at, like, tremendous discounts. Maybe it's uranium. Maybe it's CCJ at 16 or 18. We don't know, right? But do you see how, like, when the thought process is, like, once the TLT spikes, it's not going to be like, oh, let's ride the TLT up for another 10 points. No, it's going to be like, ooh, what is getting smoked here? What is absolutely in the radar for, like, long-term bottoms? You know? Like what copper stock Arrow? Like, is this thing gonna be at like $7 or $8, $6? Ooh, yeah, right. CCJ, if you believe in uranium, it'll get absolutely kapowed. Maybe it's in the 17, 18 range, right? And then it's about to go on the what? The monthly ripper, like it did in when post 2008. I mean, it went from the bottom, went from what 13 up to 34, started that, and then up higher. I mean, again, if it's a commodities bull market, like this is what I want to trade, right? Like this is what I should be anticipating, right? My friend X. Like this is what I want to start anticipating when the the VIX or the TLT bottoms. Like materials are going to probably start cooking. It's not going to be a tech bull market, right? I mean, shit, shoot Cliff, Mr. Cliffy, right? Like we know when the Feds are going to pivot, this stuff is going to start to be, or and the recession. Because keep in mind, this is what's going to be so. Man, I apologize if I'm talking too much, but this is why this is so hard. You have to like think about it through the probabilities. Like, all right, we know the tech bull market's over. We know the commodity bull market is starting, hence why they've been acting better. But once the TLT spikes, I don't think the TLT upside is going to be there for that long. Is now a good time to layer in the TLT? I mean, you see this. This is what I'm anticipating right here. Like this chop action before one pop. We're at the range lows on the monthly. Here's the monthly. Let me pull this back so you see why this matters to me. Let me thicken up the volume at price. Do you see like, here, let me back it off. You see how you've triggered now all of the sellers here and you're at support? Like these levels matter. People know this. Now, I don't know anything for certain, but I know repeating patterns. Like if this is going to be some sort of base level to pop, then yeah. I mean, this is what's, again, this is the hardest part of trading. Right? Like the Feds are going to raise rates and it creates a recession. So people are going to go, Feds are raising rates, but they don't realize that's the interbank lending rate. Well, people are going to buy the bond market because they're going to do what? They're going to anticipate the need for safety. They're going to look for their money to be safe. If they think a recession is coming, they're going to buy the TLT, even though the Feds are technically raising rates. Remember, interbank lending rate is all about liquidity. Bond market will get bought because of what? Fear. Is this clear? Clear. Now, again, if you chase the TLT on that pop, this is what we talk about chasing. Now it's pulling back to 107. I mean, your downside's 106s, 105. I mean, maybe it gets 105s next week. I don't know. Do you see why I have gotten half of my TLT position and I'm not doing anything until I see the Feds? Wow, this has been going on for an hour and 20 minutes. Holy jeez. I hope this is worth it. I mean, again, this stuff has to be... I mean, I don't mind talking about the Discord room, but you got to know. You have to know. What? The probabilities. If you don't know the probabilities, then you're pretty much flying blind. I'm trying to give you guys a map. Now, the map is what? How I interpret it, how we interpret it. Now, again, it shouldn't be that totally different, right? Like, the map should be what? It should be very, oh, this is what you think should happen. This is what should happen. All right, cool. Well, here you're back on the TLT daily, right? You are look below. Remember we talked about look below and fail. Same thing we saw with Apple a couple days ago. Let me see if I can pull that into the plethora of examples here. Come to me, Apple. Come to me, you fruit. This is the problem with too many screens, right? It's hard to drive this. I can drive stick, but driving 8-10 screen action constantly. Remember we talked about there was a clear floor here at 153.60. Look what it did. Broke below it, then it popped. right? Oh gosh. Thanks, hourly. Interesting. Okay. Interesting. Yep. Does this make sense? It went slightly lower, then it went higher. That formation is like, it's probably your favorite formation if you're a swing trader, because it like guarantees like game over for the bears because they're all in short, game over for the bulls because they gave up, and now the market maker is going to move up the price and get them to overpay for it. Let me clean this up. Get out of here. There you go. Would we say there's like a clear base bottom here somewhere in this, I don't know, this range here? Everybody's not sure about bonds, but they think it's going higher, and then it goes up, and then it, boom, comes right back into it. That has to be your favorite trade. That's how you bottom. Same thing, I mean, pretend, flip this chart upside down. I wish I could. Chop, chop, chop. Goes slightly higher, comes right back in. Game over. The bear and bull trap. That is by far your favorite scenario to trade, but it's also the most difficult by a bazillion miles. Why it's hard? Because if you're a technical trader, you're going, well, that's my support. This is my stop. Well, guess who else knows that? The market makers knows everyone stops. Where are they, right? They're going to be near the lows. Like, you know, let's pull up SPY real quick because I'm just slightly curious. Again, I haven't really updated my charts today. I'm going to clean up my hourly. Getting a little dirty. Think about it. Like if this was the lower range, right in here, I mean, whatever. That candle coming back and then double bottoming, bullish, right? Do you see that? Like you have a very clear range. You took it out, you held, you double bottom. Now that's even harder because you would rather see the look below and then it starts to climb higher. But then the double bottom, no, that's incredibly difficult. But now, so this is what I'm trying to like warn people. Like, look at the SPY hourly. Do you see this big red candle? Do you guys see it? Just making sure I'm not talking about. Do you see this big red candle? How many people are still watching or following? Okay, when you look at this big red candle, can you tell me what's the problem here? It's like where's Waldo? What is the problem with this red candle? Hey, I'm glad y'all are here. What is the problem with this red candle? What can y'all tell me? My VPA friends here who have now studied and read the books. What is... Yep. Too low a volume for huge price down. Absolutely. That's the anomaly. So people start saying like, hey, you're starting to buy here in like the 400 range. Well, because I see this anomaly. I'm like, that doesn't make sense. This is clearly a manipulation candle. It's not an actual like confirmation candle. It's like a trap candle. Okay. Well, it went lower. Well, that's what happens sometimes. I'm sorry. You know, people are like, oh, well, you saw this candle was an anomaly, and then it did what? It kept going lower. Okay, well, that can happen. Right? That led to some lower lows. Came back up, but also keep in mind though, like at least the volume there was to trap. Remember, at least the market makers had a game here to trap before it went lower. Now coming off the highs, I mean, this candle just, I mean, it's like imagine if you're going to the grocery store and you're shopping for green apples and there's like a red one right there and you're like, what? That doesn't make sense. And then you go, wow, this is OPEX. What? I mean, the candle volume is what? 59 million shares on the 10-minute? Like, when's the last time you saw like that kind of size post like any news? Because remember, this is after hours trading, but still like that. What? That was a lineup, all the sell orders in a row, and then you have the opening candles, and now what? Now you're basing. I mean, if you're the market makers, you're loving this action. You are absolutely loving this action. I don't know when it resolves. Maybe it's not till tomorrow. Maybe it's not till Friday. I have no freaking clue. But something's wrong here. This candle, again, yeah, I know it's after hours, yada, yada. Still, that's a problem, an absolute problem. I could sit here and talk about this kind of stuff, but it's one of those things where if you're OPEX in it, right, you know what's going on here. What happened August last OPEX? What was it up here? Yeah, you had like this choppy. Remember, people were like so bitter about picking the top, and it's like at the highs, what did they want to do? They wanted to hold the market up, suck in all the call buyers, and then proceeded to bring it lower. Well, now what's the opposite going on here? Yep. Same kind of action here, essentially. You know, you and again, when I say essentially the same kind of action, like the same kind of action to like get everybody to do what's wrong. No one's buying the lows. Everyone's shorting. You run it up. Now people are getting excited. I'm so excited. And then boom, pull the rug out, game over. Now this to me is what gets really tricky mentally. Who has the most to lose here? The bulls just got rope-a-doped. The put-call ratios too. It seems obvious. The easiest market would be do what? Up. All right, the Feds are not going to raise by 100 basis points next week. That is like the news. That's the noose. Just got some news. I love to hear that because that's just wrong. The Feds are not going to all of a sudden go. If CPI just went from 9 to 8, and they're going 75 basis points, 9 to 8 is a lower growth rate of inflation. It's crazy to say, and if that's the headline going around, and we know the news is what? Bull crap. And when I say bull crap, just crap. Man, you got to be like super excited. I mean, I'm trying to hold it inside. I mean, I think the market's about to rally back because that's not going to be true. That stuff is usually just noise. Now, again, did they say that at the highs? No. They weren't saying it earlier this week. And they meaning the news. Well, now the news comes out and it's like all day they're going to run this headline. And people are, me, you, everybody here, as we wrap this up, we're going to be like, who's got the power to stop the action? Who dat? I don't know how you want to draw this thing, whatever. That's why I hate the news. Like, do you guys realize, like, I haven't watched CNBC since, like, Kramer was, like, freaking out in the 2000s. I literally don't watch it. My dad is ever listening. That's what I'm saying. Like, I mean, that's what the people are watching. Dumb money. Dumb money. Yeah, Tesla coming right back. Think about, again, I'm going to end it just like I did last video. Think about the things that matter the most. What's the market maker want? How's the operators trying to screw people over? And how are the most amount of people going to lose? If you're not thinking about those from those three perspectives, then you don't see the market for what it is. Well, the news is what? The news is what? We say it all the time. I mean, Anna Cooling put it really good in her notes. She did a really good thing by putting it in this notes. In her 8 rules. Read this stuff and know it and like understand it. As merchants, specialists will expect to sell at retail what they bought at wholesale. What does that mean? They're trying to get discounts to sell to numbskulls later. The longer the specialists remain in business, more money they will accumulate to buy whole at stocks at wholesale, which they will want to sell at retail. Hello, gold, 5,000 years of this trading. Those are not market makers for 5,000 years, but you get my point. Like, these specialists in gold and silver are the pros. The pros. Same thing with SPY and Qs. Well, not even the Qs, I'd say SPY. The expansion of communication media will bring more people into the market, tending to increase volatility at stock prices as they increase elements of supply and demand. What does the news do? It gets people to act. We have to talk about the higher interest rates. Let's talk about it. Yeah, that's what they're doing. In order to buy and sell huge quantities of stock, exchanges will seek new ways to enhance their sales techniques through the use of the mass media. The mass media is doing what? It is parroting the wrong idea intentionally to get you to do what? At the highs, buy. At the lows, sell. 5. In order to employ ever-increasing financial resources, specialists will have to effect price declines of ever-increasing dimensions in order to shake out enough stock. Yes, we talked about it 2 weeks ago at the lows. They had to chop the market down to get inventory to mark it up. Well, guess what? They marked it up. Today's action, good. I mean, they might be doing it again. Advances will be even more dramatic to the upside to attract public interest in order to distribute ever-increasing accumulated inventories. What did I talk about last year with Tesla? That was game over. People who are buying it for long on, you are absolute stupid idiots that are just literally got caught chasing for years. It was unbuyable. And then all of a sudden has one monster green candle with multiple splits. Oh, I'm going to hold it forever. Like, okay, you just got duped into number 6. 7. The most active stocks will require longer periods of time for the distribution. Makes sense. Why do you think a bear market is choppy at the top? They got to unload Apple. It's been owned for a long time. The economy will be subject to increasing dramatic breakdown, causing inflation, unemployment, high interest rates, and shortage of raw materials. This is what causes a recession. Do we have all of those in place? That's all I got to say. Again, all this stuff is in the Discord room. I'm sorry I'm shutting this down at some point, but you can watch in the videos and you can talk about this. But I'm telling you, the market is not somehow anything other than what it is. It's a game to take your money. If you don't realize that, you are the target. This is no different than the poker game. The person who doesn't know they're the target is the sucker and the target. If you don't know you're a target, then what are you doing? If you think somehow trading, you are just like being given handfuls of bags of cash, you are the perfect person to be trading. Oh, let's buy out of money calls this week. I'm going to get big bags of cash. Let's do this trade. Let's chase that. Let's buy the highs. Let's move our targets higher at the lows. Let's get scared, or let's move our targets lower. Let's freak out. Yeah, I mean, you guys don't realize, like, this drains me mentally, but I'm like, that's why the Discord room, I'm like, man, this is getting way too out of control because so many people aren't doing the freaking work. All of this stuff is in the side rooms. Oh, but Dan, I saw this candle do that. Well, what does it mean to you? Well, no, Dan, what do you think? No. What does it mean to you? What does it mean to you? Right? Like, that's what matters. What does it mean to you? Because we're just interpreting the market. And I'm not trying to be mean to folks, but like, you don't realize you're the sucker? Why do you think I'm yelling? And not yelling, but I'm like raising my voice to the point where, like, wake up. Are you, the blue or red pill? Do you want to continue doing what you've always done to lose? Or do you want to start doing things from the perspective of, what does the market maker want? Now, does that mean you're going to start making bundles of cash always right? No, the game is still hard. But at least now you're putting the probabilities in your favor. That's the first starting point. That's the pivoting of mentality, pivoting to the winning process. Do what the market makers want to be done, not what we want to do. You, me, and all the retail happy-go-lucky dummies. Oh, I want this to happen. No. I mean, a part of me yesterday, of course, wanted to go a little higher because I had some long positions. I would have loved to unload it. And what did the market maker do today? Pulled the freaking rug out from under us. Now, if I was all in long and got right back here, man, there goes all of those gains. But guess what? I've been there before, so I know what. I don't move up my upside targets when I have winning trades. I start getting greedy as hell and I start putting money in my pocket. Do you get this? Do you get the difference here? Now the market gaps down, the market's going lower, and you're buying more, and you're buying puts and shorting more? What are you doing? It's no different. Flip the mindset. Bull, bear, it doesn't matter. Got people DMing me, hey, what do you think about puts this morning? I'm like, are you freaking kidding? It's OPEX. You're buying more puts on the gap down today. Yeah. I think we're going to drop into the FOMC. Okay. I mean, you might win, but that's the low probability trade. Do you guys get this now? Do you see how the market is a probability game? You don't adjust your probabilities based on your emotions. You stick to your levels, your price targets, your stops. You try to do what the market maker is doing. There's none of this game of, well, I hope I win big here every time. No. Stop it. You see Bitcoin do a once in a generation move and you think every trade of yours is going to be Bitcoin? The evidence says it's not. Oh, you think every stock is Tesla? It's not. You got to get out of that mentality. Oh, but what if you miss the rocket ship? What are you talking about? What's a bull market? What, a bear market up move? What? Huh? Okay, but what's the thing about bear markets that I just said? The last leg is a straight line down. Are we there yet? Probably not. All right. I hope this helps. I'm got to go to the doctor. Got to take my wife. She's got some things I got a driver for. Probably do a recap later, but there's really not much to say. If you've seen this chat, you know exactly what we're expecting. The market's going to float back up as the day goes back on. It's really that simple. Because why? Because that would do the what? Most amount of damage to the most amount of people. Those buying puts today probably getting real excited by this drop. They don't realize it's options expiration. They don't understand the pre-market pull down of the market because they got everybody to freak out in the first hour. I hope this helps. Again, I mean, if it's one person, that's all I care. Like, somebody learned something. Because, again, if you are doing what you've always done and you don't have a consistent edge, that's on you. The market is a game of chaos and randomness, of ultimate display. Buying out of the money calls, gambling on this thing, trying to do this. Don't try to do things that are random and lucky. Try to do what the market's doing with the best probabilities. And if that means smaller trades, less risk, higher guaranteed wins, do that. And tell me in 10 months, a year from now, how much better you're doing. I guarantee you doing small correctly, but bigger trades with more confidence, knowing what you're doing, guaranteed long-term winning success formula. If you are gambling left and right, throwing down option trades, throwing down trades that just don't make chasing action, I can guarantee your end, it's the same. Same ending that I always got to before I had to like pivot to do something to like remind myself of the mentality. You are going to get your ass kicked. That's all I got to say. Be safe. Later.